let's hope it stays steady and doesn't get sold into, as we've seen happening so many times in the past as well. The market breadth, of course, is positive. I mean, 10, more than 10 is to 1, but this is still just very, very, the first couple of minutes of trade. Real estate as a pack is moving up, so maybe we can pull some of these names up. The index is up about almost 1% or so. PSU banks are not doing badly. They're up 0.75%. The index, that is. The Bank Nifty itself is up 0.6%. And you've got the small cap index up about 0.6%. That's basically the sum total of what's doing the best. So PSU banks, real estate, and small caps at this point in time. I mean, the Nifty is kind of moving around a little bit. It's up about 65 odd points now. Sonia mentioned Adani Wilmar. What a move we are seeing on, by the way, very large volumes for this point in the day as well. So, you know, just an incredible move we've seen actually this year, right? Let me just see. This year, the stock would be up, a lot. I mean, it's from the listing, by the way, and the listing has not been all that far. So from 250 odd levels, it's basically doubled essentially. And the listing happened in early February. It's up 100% since then. So that is Adani Wilmar's spectacular rise for you. What else do we have? We have, I think, steel, which is not doing all that badly. It's up a little bit. ICICI Bank recovered. ICICI Bank and others recovered in the last, 15, 20 minutes of trade. ICICI Bank is up another 2 odd percent right now at about 715. So that's basically what is going on right now. Our market master of the day is with us. Ashwini Agarwal is co-founder and partner at Ashmore Investment Management India LLP. He's with us to take some questions. Ashwini, great to have you with us here. Thank you very much. It's been a while since we've chatted. And I remember the last time we spoke, you were sounding a bit worried about, I mean, the overall situation, commodity-led inflation, what it may do to demand, margins, etc. Markets were at that time in the throes of a bit of a turmoil, mini turmoil. Where do you stand now after all that we've seen over the last few weeks?
So, no, thanks for having me over. When I look back at what's happened till now, obviously, you know, a lot of the worries that we had towards the end of last year and early part of this year are starting to get priced in. So, you know, I'm not looking at the Nifty as much as I'm looking at individual stocks, and you will find that several individual stocks are down 30–40% below their 52-week highs. So obviously the concerns about inflation, about slower demand, about what's happened on oil prices and so on have been priced in to some degree. But at the end of the day, I think the moot question remains that we still don't know how deep is this demand slowdown. Not as much in India, but outside India, and external demand is a driver of growth in India. And the second thing is we don't know how long this inflation challenge will persist and whether it will translate into a wage spiral as well, which will force central banks everywhere to step in a lot harder than what the street is estimating at this point. So I think there are still points to worry about, but of course, while the Nifty hasn't corrected so much, I think from a bottom-up basis where you've seen an extensive correction, there might be opportunities to look at individual ideas.
Ashwini, good morning. You know, when the year started, you can correct me if I'm wrong, I could sense that the market was making a bit of a move from IT into banks and financials and the economy-facing stocks. But then this whole Russia-Ukraine war started, and once again, there was a bit of a safe haven buying in IT. But, you know, your thoughts on these two big pillars of the market, IT and financials, how to approach them incrementally?
So you're absolutely right. I mean, towards the end of last year, people had started, fretting about the valuations of IT services companies. Wage inflation, especially for IT workers, had become a point of concern. And while there was no worry about top line growth, there was worry about margins. And I think that narrative still continues, except that now we expect a little more tailwind from a weaker rupee. And as you correctly said, that there is a safe haven status that's being accorded to IT services. So at the margin, I think there's a swing in favor of IT compared to where we were 3 months ago. On banks and financials, I think the narrative remains the same. I think the credit costs, the worst of them are behind us. From here, you will see an improvement in credit costs. I think in the short run, especially for the banks, rising rates, if they were to materialize in India, are a short-term positive. I think the key issue remains whether we will get to see loans growth, which is still at around 8.5%. One is hoping that loans growth accelerates. But that comes back to the first question that I pointed out, that how deep is going to be this slowdown globally, less so in India, how strong is going to be external demand drivers, and will the material inflation, will the inflation in consumption baskets hurt both demand and supply in India enough to crimp capex to a point that bank loans growth remains constrained and single digits. I think that's the only concern. Otherwise, BFSI as a space, especially the banks, remains quite interesting and attractive.
Okay, by the way, Adani Wilmar is really soaring now, 7% higher on that stock. And I was just looking back to see on 23rd March is when the company spoke to us, where they said that they are on track to close an acquisition in the food space, and they have earmarked about 500 crores for these acquisitions. So from 23rd March to now 29, just look at the move that we've seen on the stock. A 1 week chart would be pretty helpful, almost at 500 rupees right now. Ashwini, hi, good morning. Some of these players, the stronger ones, have indicated to us that this raw material cost pressure is largely a pass-through. They will pass it gradually but entirely. So it won't really matter 2-3 quarters down the line. Do you go ahead and buy into these names despite the challenges that they're facing? Not just the Adani Wilmars, but something like, say, an Asian Paints or the market leaders in the FMCG space?
So, great question. And we've been looking at some of these FMCG stocks as well, which have, come off quite a bit. And like you point out, these are market leaders with great customer franchises and very, very solid brands. And over a period of time, they will be able to pass through the cost of higher raw materials. The question is, how does the demand respond to higher prices? Do people move down pack sizes? Do people kind of, purchase less and live with less? I mean, that is not very clear right now. So, and one will have to have to brace through at least 1 or 2 quarters of rough earnings as well. And valuations are quite punchy. I mean, if you look at what has been the biggest winner in the last 5 years, it's been the FMCG space. And if you look at long-term valuation metrics, while some of them have started approaching median levels, a lot of them are still quite expensive. So I think you're right, opportunities are starting to emerge, but not without challenges. And I think it's going to be a bumpy ride.
What are your top ideas, Ashwini?
Unfortunately, on a sector basis, there's very little to call out. So like I mentioned, and you pointed it out, IT services, BFSI appears to be a good place to be. Telecom, where significant consolidation has taken place and we are starting to see ARPU increases come through, could be another place to be. But essentially, we are all looking for places to hide. I think it's a difficult scenario, at least in the short run. And I wouldn't, worry so much about upside, but I would worry about downside. And therefore, the attempt should be to preserve capital rather than look for gains. Having said this, at the start, I had mentioned that there are several stocks which are down 30-40%. There are several businesses which are very good but going through a temporary challenge. I think that's where some opportunities will lie, but one will have to be patient, because I think the earnings information that will come out in April and May may not be as good as one might have hoped for at the start of the year. And I don't know how much of that is priced in versus some of that might still get sold off when the earnings come through and earnings downgrades start to happen. So that's how I'm thinking about things. I mean, opportunities are there, but more bottom up. It's really no sector bias barring the 2 or 3 that I mentioned.
Okay, what about metals? Again, it can be very rewarding if you get it right, but can be very punishing as well. It depends on the cycle. But any metal name that you're looking at?
So we've kind of stayed away from commodities, as investors, because there are far too many moving parts which are relevant in the short run and very difficult to kind of keep track of all of them, especially because many of these drivers tend to be global in nature. And I think, what's worrying me in metals is that the global demand is slowing down quite rapidly. Our sense is that China is slowing down. Europe is obviously has its own challenges. US will face challenges because of higher rates being indicated there. So as global demand slows down and as transportation bottlenecks surrounding shipping, surrounding mining output, etc., ease a little bit, will this positive narrative continue is something that I'm not very clear about. I do recognize that no significant investment has taken place towards new capacity over the last decade, and therefore, one can make a very strong case that this turnaround in fortunes for metal companies, material companies, could be a longer term development in the future, and we are kind of struggling with both. But to answer your question, we are not looking at any metal stock right now.
Just one final question, if I can squeeze it in. The buzzword now seems to be green energy. There are a lot of big investments being made here. We just heard about the possibility of Mubadala investing in Tata Power. NTPC is going big into this space as well. Is this the future, or do you think there is still a lot of hurdles here and perhaps investors should stay away?
I think, this is a space for long-term patient capital. Obviously, there is a lot of future here because fossil fuels, have their limitations, and global warming is a reality. We all can't run away from it. So green energy is the way to go. But I think for public market investors who are looking for consistent returns on an annual basis, this is not the place to be. This is still very, very long-term in nature. How it will evolve, what will finally win is not very clear. So probably more suited for private investments and for long-term patient capital than for public markets is my personal view.
Okay, all right, Ashwini, pleasure speaking with you. Thanks a lot for joining us and helping us with the markets, which, by the way, is holding up quite well. Decent opening there. The mid-caps are having a better showing this morning. Mid-caps up over 200 points, and the Bank Nifty is also making its presence felt, up about 130 points. So good extension to yesterday's pullback that we've seen. But Muthoot Finance is in focus on the news of its expansion into